there. You are Bhat of Dalton Capital Advisors is with us now. Morning, Mr. Bhat. Thanks for joining in. It's been extremely range-bound these last few sessions. Do you think this will end, this pause, with the Nifty breaking out of 5,300 or breaking down below 5,000?
I would place my bet on breaking below 5,000 because the market has been sort of consolidating at these levels for quite some time. Volumes have come down. There does not seem to be great, at least interest in the domestic institutions as far as buying into the market is concerned. The only good thing has been foreign institutional investors have been buying into the market, and the calendar for new issuances have been extremely busy, and they're not been faring very well. So therefore, generally, I think there is some sort of tiredness as far as the market is concerned. People are not really taking big positions, and they're just waiting for something to happen so that the market can break out either way from the range. And it looks like as if unless we have huge positives from this advanced tax collection or monsoon that estimates about how the monsoon will fare this year, the likely outcome is that people will get tired and start liquidating a bit.
Mr. Bhat, morning. Before we talk about the market in more detail, what did you make of the NMDC episode and the way it finally closed?
Well, I think that is an object lesson on how not to price an issue, especially when you have an FPO where you have very, very low liquidity, very low public holding, and that is taken as a benchmark for pricing. I think institutions have their own way of valuing companies, so it might not really be reflected in those those stocks which are very thinly traded. So I think, and of course, from a government perspective, it is quite difficult to indicate a price at a huge discount to the traded price. So I think there was some lessons to be learned, and I think those lessons are well learned. And finally, actually, at the end of the day, what really is the takeaway from this is that the domestic large institutions which have been big supporters of these divestments, they might have to actually sell out in the market in order to ensure that the follow-on issues of other companies are going to be a success. So therefore, I think typically the market tends to think that March, April sort of thing, the insurance companies are the ones who will really take the market up. But that might not be the case this time, at least as far as the public sector is concerned, because most of the money has already been used in propping up the divestment candidates.
That's an interesting point, Mr. Bhat. Are you saying that because of this very large bailout of the FPOs by the domestic institutions, they might actually be in the market with some kind of a liquidity overhang? They would want to liquidate whatever they're buying at regular intervals?
I think so. I mean, it might not have reached that stage as yet, but we are probably getting closer to that stage, because if you have to raise another 40,000 crores or whatever next year, and if the market has the same sort of attitude towards divestments, then I think that is how it will end up, because their capacity to buy in the secondary market is going to be completely reduced, and as also they might have to actually generate liquidity in order to keep on investing in these FPOs. So therefore, I think as a force, the domestic insurance companies and the government-backed institutions, as it were, they might not be such a large force in terms of propping up the secondary market. In fact, they might actually be a negative force. So that is something that we need to factor in going ahead if this continues.
How much erosion can all these multiple elements cause for the market, Mr. Bhat? If your call is that it's more likely headed towards 5,000, what looks like the downside risk, or how deep does it seem?
Well, I think as of now, the mood in the domestic market, at least the domestic institutions, doesn't seem to be very bright. So the market, if it is at whatever level it is now, is largely because of FIIs continuing to have a great appetite for India. That is contingent on what happens, how the European situation shapes up. Because even till today, nobody is writing checks. Everybody is propping up the market, saying that we are there to bail out whatever Greece and the pigs and stuff like that. So finally, I think how this settles down and how the appetite for risk continues, how long will the zero interest rate policy, virtual zero interest policy, and infinite liquidity situation in the US, how long these things are going to continue. But there is certainly a time limit up to which this will happen, and after some time, people will start making noises about tightening, about about withdrawing liquidity, about raising interest rates. So I think it's all contingent on that. So right now, with the sort of growth story that India has shown, the IIP figures are there for everybody to see. I think money continues to be attracted by India, but we really don't think that it is worthwhile for us to extrapolate this for the very long term. Maybe for a month or two, but not much more than that.
We're getting some preliminary advanced tax numbers this morning, but what is your expectation from earnings season?
This earnings season would probably not spring huge surprises because quite a lot of the growth has been back-ended. I think FY11 is what the big play is, because the FY11 growth numbers as far as earnings is concerned is anywhere between the high teens to the high 20s. So therefore there's a lot of range there. So I think people have to sort of make up their mind as to what sort of growth is possible in FY11. FY10 is almost done. So advanced tax figures will probably confirm the sort of expectation, the low single-digit growth in earnings that most people have an expectation from FY10. But I think FY11 and FY12 are going to be the sort of influences of the market going forward. And FY11 is the biggest sort of range play, as it were. As I said, from the high teens to the high 20s, that's where the earnings growth expectations are. And I think that is what will take the market up or down.
We have inflation numbers coming in today, Mr. Bhat. In the next couple of months, how much would the inflation numbers and the RBI's actions, how much of a headwind, if at all, do you expect it to pose to the market's movement? Is it in the price, or is that something which the market will hinge around?
Well, I think there is certainly something in the price. People are expecting inflation to go up, but I don't think too many people are giving a number of sort of low double digit. They're still thinking of high single digit inflation. But there's a possibility over the next quarter or something that it can even go to double digit. So that might actually be a dampener for the market. Plus the sort of action that the RBI might take at the end of April when the credit policy is there. There is certainly some expectation of increase in interest rates. But I think it is very, very low, sort of 25 basis points or something like that. But if it is higher than that, I think there is probably going to be some more pain in the market.
Not a coincidence again that
there might be a case for.
Please go ahead, Mr. Bhat, you were saying?
No, I was just saying that since inflation is really looking up, so therefore there might be a case for a tightening of interest rates much higher than what the market is expecting.
Sure. Mr. Bhat, any thoughts on FMCG as a space where the lever has been struggling over these past few quarters, and smaller players like Godrej are actually getting more aggressive on the M&A front?
Well, I think lever has been an underperformer for quite some time now. Basically, I think the issue is that probably leadership in specific positions are being challenged, and that is where we see that the old story about when in doubt buy lever. That I think has taken a back seat now, and there are other people who are challenging leadership positions in various segments. So I think that is a story that's going to play out very slowly. So therefore I think it's worth staying out of at least lever for some time.